Welcome to the weekly analysis for the week of Christmas. I know some people choose not to trade during the holidays. I have found myself that sometimes the holidays make the best moves. So, with that being said, we will be going through the weekly analysis with what I see could be a possibility, okay? As always, I am going to go through my thought process, how I analyze the chart from a top-down analysis, and these are just my thoughts, so let's get started. All right, first we have AUDCAD. All right, we have a bearish order block. I always start either from the weekly or the monthly, just to identify like where we are. Identify structure. Structure is king, queen, whatever you want to call it. Okay, so this is my break of structure. And I'm going to always do this so you can know from a higher time frame how to analyze your chart. This is a swing low, and this is the swing high. Okay, so, and this is our swing high, higher time frame. All right, so anything between this low and this high is ranging. All right. However, once price broke structure, pushed up, you had a level of structure here. So that was a market structure shift. All right. Once the shift happened, price pulled back up to, and I always look at price action. When I say price action, I mean these wicks. As you can see, there are like 3 green candles here. So I would mark up that whole zone as my supply zone. But remember, price has to break structure. And I do not consider these as breaks of structure, okay? I do not consider this in here as a break of structure. For me, price did not close above here, so that would not have been my swing low. I need to see the break, and then I need to see the break to the downside. So with that being said, once I had this break, you can mark up your supply zone. Price came there and did what? Gave another break of structure here. So, and let me just step back just a minute. Anything where I get the closed candle, everything from that point, from this point on, where I got my closed candle, all the way up to the high or the peak is considered part of the swing. Okay. And I'm saying that, and I'm going to show you right here. So price broke here. So that means everything from here all the way up here is my swing. So these internal breaks, this internal break, this internal, like all that means nothing to me unless it breaks this high. Yes, once it broke here, this was internal, right? This was internal. Oh, and I do want to say something. So once you identify that this is the swing high, this is the swing low, right? So if you fib that move and you start getting your market structure shift, you should be expecting price to come back to a discounted area. So I would have been expecting price to come to this 78, 78, and I still expect price to come to this 78. All right. So once you got your market structure shift, or if you call it a change of character, whatever. So you got this break of structure, price pulled back to, this is your high, this is your low. Price pulled back to your 78 and started a change of character, okay? To the back to the downside. So now I'm expecting price to either definitely come to these lows. I'm actually expecting it to come to the negative 27. As of right now. So once price pulled back to your, because you had this break of structure, once price pulled back to your 78 and then gave you another change of character, what I do is mark up my supply zone. So I would be expecting price to come into this zone and then start selling. There has been no change of character for this zone yet. So if you're looking at the monthly, there was a break of structure here. All right, that made this your swing low. Okay, so price pull back. As long as price does not break this low, then you're going to be buying. You're going to be buying. So if I went down to the weekly, that didn't give me anything. Let's go down to the daily. Let's go to the 4 hour. And what I'm looking for is a demand zone. Here we go. And I'm just going to mark it up. So once price gets here, I'll be looking for price to start buying back up. Oh, wouldn't you know it? Price tapped there to the demand zone. So I would be looking for price to break this little neckline here. I don't consider it an actual break of structure because price did not close below this zone here. But once you get peak formation, if you get we already got this impulse move. If you get another bullish 4 hour candle, then you're going to get a pullback at least to that supply zone. And I personally think that it will probably go higher since it pulled back into, because we're expecting price to this was the break, this was the demand, oops, right, this was the demand. So I'm expecting price to at least go to these highs. So we're talking approximately 410 pips. Well, let's go from where it is now. So 400 pips, okay? 400 pips, okay? Now, if you want to wait, you can wait for a structure to actually happen, meaning this was your break of structure. So that made this your swing high, right? Oops. So that made your swing high. And this was your break of structure. And this was your swing low. You would want to see price break this high first. So it'll probably break this high, come into this imbalance or to the supply zone, and then start pulling back to a demand zone to then continue buying. So this right here, once this push up, pull back, you can at least sell it up to these highs. There's equal highs here, so you can definitely take it up to this high, right? Because like I said, this for me is not the structure I would want to see for price to go all the way back up here yet. But because it tapped into a demand zone, I am expecting price, and then gave me peak formation. If you don't know what that is, go on to YouTube and look it up, okay? So I'm expecting a pullback to at least maybe this supply zone, and then maybe pull back, or this supply zone, or maybe even break close above and then pull back. So just note that once it starts breaking this swing high, you know you're going to get a pullback for a continuation. So that's what I have for AUDCAD. Next, we have AUDCHF. AUDCHF. So again, I look at higher time frame. I look to see that we have a break of structure here. So that's a swing high, okay? So once price broke here, you look for your supply zone, wash, rinse, and repeat. And there you go, okay? Now, once we have a break here, all right, then I'm looking up here for my supply zone. So, so I would mark up my, this is my little supply zone right here, right? So once price broke structure here, price did not pull back to that supply zone. It gave us another break of structure. So once you get that break of structure, you can mark up your supply zone. So let's go to the monthly, see if we can see it a little clearer. Okay, there we go. So once you had this break of structure, you had a supply zone here. Okay. And that's the only one that I see. So that's where price came back to and then started selling. Okay. So let me go, I trade the market maker cycle. Google schmoogle. So 1, 2, 3 pushes to the downside, price pulled up. Now, I do believe it will likely come and take out these lows. So based on the weekly analysis, we have a weekly order block. So let's look for our last break of structure, which was here. Price broke here. So that means everything from here to this high here is my structure. Okay. So now that price is broken there, I'm going to do what? Mark up my supply zone. So price is either going to come here, respect it, and sell down, or we're going to continue based on this order block. So I would wait for, once the market opens, price may pull back into the order block and then sell down. I'm sure if I went down to a smaller time frame, there's probably some kind of supplier demand zone in this wick. So prices either come in to take out this low or both of these lows before pushing back to the top side. And because I've gotten my market maker cycle pushes, and it's not just 3 pushes, it's really a little more complicated than that. But I can see it coming back down here and then starting to push back up to, well, the first place would be here, right? So that would be the first place I take. The first target once these lows were swept. Now, if price closes below these zones, then there's a supply zone here, but it would have to close. If it just wicks, then 9 times out of 10, it's going back up here. All right. That is what I have for AUDCHF. For, oh, why do I have this one on here? AUDUSD. Let's see, why do I have this one on here? This one on here. Let's go to the monthly. I think price tapped into a supply zone. This was the last. This was the last. It did. Okay, so that was the supply zone. This was the last break of structure, higher time frame break of structure, right? Tapped into the supply zone and then started breaking internal structure. So you have this internal, you have this internal, okay, and then you have this swing high right here. So price, well, let me rephrase that. So because price broke structure, this was your supply zone. Price came back to that zone, pushed down, but because price has already mitigated all of the demand zones for a possible buy, we should be looking for, now maybe price is coming to take out this low. And if I go down in time frame, there may be something in this over here. Based on the weekly, if I look at the last swing, which is from here to here to here, this is the swing high. This high was taken out, so I'm definitely expecting price to come and take out this low. This has already mitigated the demand zone. Just mark that up. Okay, this is a demand zone. So I would expect price, since it took out this high, I'm expecting price to take out this low. So once price takes out this low, then you probably want to start looking, go into a lower time frame. Based on the 4-hour, you have a supply zone here. So, and this is not, I don't consider this structure. So price could come here and then price can come here. There's another supply zone up here or even up here, and then push back down to take out that, oh, it's right here. Take out this low. And if that's the case, take out this low, And if that's the case, then you would look for price. This would be your structure. You would look for price to take out this high, and then you would look for your demand zone to then start buying. That is what I have for AUDUSD. CADJPY. We have a weekly bada boom. Let's see. Price took out that high there. That means everything from here to here is your, this was a swing low, right? And then once price broke, pulled back, this was a swing. Okay. And then once price broke, pushed up, pulled back, this was a swing. Okay. Pushed up, pulled back. I mean, pushed up, pulled back, and then broke once, and then once it broke here, that was the swing for this break. Okay, so once price broke here, this was the swing low. Once price broke here, it pulled back. Then it broke here, it pulled back. Then it broke here. So now it has broken or made market structure, internal market structure shift, right? So, so I would be expecting, based on the weekly, so I don't consider this structure. All right. Price did not break below here. So this is not my swing high. That is not my swing high because price did not close below this wick. All right. So as of right now, this is my push. All of this is one. Okay. We pull back. We broke internal structure. All right. Left an imbalance, order block. So mark up your supply zone. As you can see, price tapped into it right now. So we should be looking for 4-hour or 1-hour change of character, which occurred right here. All right. So now that that has broken that or made a change of character there, what do? I mark up my supply zone. Now you can mark up this big one candle here. This one has already been mitigated. So I would mark up here. Now, I know you say price tapped into it right there. Yeah, it has, but this did not happen after this was broken. Okay. So with that being said, price could pull back up to this zone. It might even just pull back up to this zone here. But anywhere from here to here is fair game. And I guess if you want to fib that move, you're going to fib that move. 618 is a I forgot what it called just that quick. So 618 is a fair game. 78 is a fair game, as you can see. Oh no, that imbalance. I mean that wick took out the imbalance. So 618 would definitely be 50%. 618 would definitely be a zone for price to pull back to and possibly continue selling. Okay. All right. So, and based on what we've analyzed, the sell we have this push down, we have this pull back. Then we have this break. There's a little demand right there. So we have this break, then you might get another pullback. And then you have this this zone here. So price can push all the way back down to here and either continue buying or break below here, and then it might pull back up to then continue selling. So you don't know until price gets to this zone what the plan is, what it's going to do, whatever the market's going to give you. But as of right now, this is push one, we pull back. Okay. And then we broke internal structure. So price is likely coming to take out this low, a pullback back down to this zone here, to that swing low. All right, that's CADJPY. Euro AUD. Based on the weekly, we have a bullish order block. Now, if I analyze the bigger picture, this was our higher time frame swing. Okay. All right. Price pulled back to the 78. Price pulled back to the 78. Okay. And then started breaking internal structure. Now, as price was going up, you got 1, 2, and 3 pushes. All right. Now, and as you can see, price pushed up, started breaking this internal structure. Analyze the chart. This is your swing high. Price did not break that high till here. So that means everything from here to here is my swing. This is my swing though. All right. So now that price has pulled back to the 88 of that swing and started breaking internal structure, until I get a change of character, price is still bullish. And so if we identify the last swing, which is our swing low here, which was our break of structure here. Oops, hold on. Which was our break of structure here. Okay. All right, this is our swing low. Boo-ba-doo, boo-ba-doo. All right, so price pulled back to our demand zone and took off. So I am expecting price to continue buying. So right now, we currently have this demand zone, right? So I would be expecting price, because I don't trade this, but if I did, I would be expecting price to pull back into this zone and then start buying. Is it coming to target these highs, or is it coming to target this level of resistance? One way or the other, you're looking at about 400. If it's going up here to target this high, that's 600. But as of right now, price is still bullish. Break of structure, swing low, pull back into the demand zone, took off. So I am really expecting price to, I'm really expecting price to close above this high. I would be looking for a break of structure here. And if you want to use that as the break of structure, you can, but this is the current swing high. If price had closed above there, then that would be a different story for me. But price has not closed above this high yet. So this would be at least the target once you get the pullback to buy up into. Okay. So that's my thoughts. That's my thoughts for Euro AUD, EURCAD. For a higher time frame, as you can see, price is bearish. Okay. So we had this break of structure here. And then we had a break of structure here. So once that break of structure occurred, all right. Then you have this as your swing high. All right, which then turned into market structure shift, right? So now that that has turned into a market structure shift, you can go to, let me go to the monthly because I can see it more clearly. And I can see clearly now. So you have a few zones. I don't see anything that oh, there is a mitigation right here. There's an imbalance here. So let me go down to, let me just mark this up really quick. I'm just gonna mark up this candle right here. So if I go down to my weekly, I can look for my institutional candle, which is right here. This was the shift candle to the downside before price started taking off, right? And just to narrow that down, I would just go down time frame. And I'm just gonna mark it up with, so you have here, and then you have an order block here based on the daily. So price could come down to here and then start buying back up. So with that being said, we know that this is a targeted zone. So once we got, this was the low, this was the high. This was the low, this was the high. Did that break? It did. So this was low, this was the high, this was the low, this was the high, this was the low, this was the high. All right, so let's mark it up, marker. So this is our swing high. This was our swing low. All right. Price broke the swing low. So what do? We look for our institutional candle. Okay, so we look for our institutional candle. So this is our zone here. And there's a little imbalance right there. So price has tapped into that. However, let's go down to a smaller time frame to see more structure. So for me, I would be looking Let me go to the weekly. Okay, that's more clear. All right. So I have this here, which means now the high is going to be taken up. And then this pulled back. And then this broke structure. So this was the low, this was the high, right? Price broke that high. So what do I look for? A demand zone. So I'm looking for price to tap into here and possibly continue buying up. All right. I'm sure if I go into a smaller time frame, there will be more, and maybe even in these wicks, there would be a narrow supply zone. There will be a narrower supply zone. Okay. So once price pushes back up into once price pushes back up into this zone, I would be looking for it. So there's an order block here. There's an order block with no wick. It could be anywhere. Again, if we go down in time frame, there's more. There's an order block here. There's an imbalance here. So once price goes back up into, well, this could be coming. So once this broke this high and then started breaking the low, okay, it did pull back and then started breaking internal. One push, two push. There could be one more push down here. So, but if price doesn't pull back here, then you're looking for price to break this high. And when and or if price breaks this high, you're going to be looking for a pullback to the next demand zone. Okay. And then once it comes back to the next demand zone, you'll be looking for buys unless price closes below these zones. And when and or if price close below these zones, then you know it's go time to look for the supply to then start selling back down to this low, matter of fact, all the way down back here to this demand zone that we've already picked out from this market structure shift. All right. So that's what I have for EURCAD. EURCHF, based on the weekly. Let's go to the higher time frame. We have break a structure here. Price didn't pull back to the supply. And then we have, and that means everything from this point of this candle close all the way up to this high is fair game for a sell. Okay. Then you have, we're going to go ahead and count these. This one here. And then this one here. So as of right, oh, wait a minute, Heather. And then we have this one here. Okay. So as of the break of this low, everything, so once price broke here, that was your high. Once price broke here, that was your high. So let me, so I want to make it clear. Once price broke here, you mark up your supply zone. Okay. It didn't make it up there. Once it broke here, you can delete your trade idea for this right here. All right. Once this broke here, this was your supply zone. Okay. And I know it's green, but I'm tired of changing it back and forth. So once you mark up your supply zone and then it sells. It swept here, but did not close. So now you have between this swing high. Oops. Now you have between this swing high and this swing low. So once price pulled here, didn't close below here, it swept here, it pulled back to retest this break. All right. Came back to retest this break. There is a valid order block right there. So you could have marked that up as your supply zone. Now, when the candle's that tiny, I don't even wait for it. So once price tapped into that and then gave you a change of character, then you can mark up your supply zone. Okay. Now, of course, I'm on the monthly, so there's probably some change of character on the daily, something. Yeah, that still would have been my, I would have been looking for price to break here. All right. And I still would have been looking for price to pull back to this zone. If it doesn't, then it don't. Okay. Then once it breaks the next zone, on the higher time frame, the actual break happened here, but this would be your swing high. Okay. And then you have a break here. All right. So this would be your supply zone. But again, you still have imbalance in here. So imbalance order blocks, this actual supply zone can be the driving force to push this down a little further to at least these lows. Okay. But once you had a break of structure here, what do? You go mark up your supply zone. Okay, that would have been your supply zone for a sell. Then you have a break of structure here. Okay, well, what do? You mark up your supply zone. If it doesn't come back, it doesn't come back. Just look for the next break of structure. So once we have this here, this break here, mark up your supply zone. Now y'all gonna remember that because it's getting a little catchy. Break here. Mark up your supply zone. This is how I trade, y'all. This is it. This is it. Oh, wait a minute. Did it come back? Oh, look, did it come back right here? Yeah, I definitely would have deleted this after this next break. So after this break, right? Well, I would have marked up my supply zone here. And then it will drop. So then the next break, and of course you can just take it, your target to these lows. But then once you get the break, say it with me. Say it with me now. Mark up your supply zone. Okay. Once price did not come back, then you just let it go. Let it go. And then you have these breaks here. One. Then you have this break here. And then you have this break here. Okay. So now once you have this break here, where's your swing high? This is your swing high. All right. So once you get this break, what do? Mark up your demand zone. Boop-a-doo, boop-a-doo, boop, boop, boop. Oh, I marked up the wrong zone. Mark up your demand zone. Or if you want to, I don't think it came back down here, but you can, because that one's already been mitigated, I definitely would have marked up this right here. Imbalance, institutional candle. So yeah, I definitely would have marked up this zone. As you see it tapped in. Guess what? It started breaking structure. And what did it do? It didn't pull back to the zone. But once, so this would have been a missed opportunity. This one would have been an opportunity. This would have been a missed opportunity. Okay. So once that didn't pull back, started breaking the high, you can delete your move. But once price started breaking, so this was the high here, but once price started breaking this high and didn't pull back to, now it did pull back. Yeah, I would have marked this one right here. So I would have missed that one. And then once you got this impulse move here, breaking this internal, okay, you can either, now because all these are red candles, red, you can mark up from there to pull back to, or I would have been expecting it to come back here. That would have been my, and as you can see, it pulled back to that zone and even broke internal structure, but then it had other plans. You see, it broke back to the downside here and then kept selling. So once you get, you're tapped into your demand zone, take it to your swing, the most current swing high. I mean, that's how many pips? That's 137 pips. Or you see that there was imbalance here. So you had your here, you had break and retest here, like break this low here and price pulled back to it. You could have marked up, put that as your TP, which was 168 pips. Or you see there was a supply zone. Okay. There was a supply zone here and then one here. All right, so price pulled back into the supply zone, broke structure. And that was all she wrote. So But I think we were looking for cells anyway, so that would make sense that this pulled back to here. Yeah, we should have been looking for cells anyway. So once this swept, this pulled back up to there and then started breaking structure. It should have been looking for cells until we got to this low. Or back to this support. But as you can see, it took out that low as well. So now that price has broken that low, this is now our higher time frame supply zone. Had to think about it. And then you have this broke here, this pulled back, and then broke here. So because there's no order block and or supply zone in this area, you want to mark this up as your current swing high. And if price breaks above that swing high, you then look for what? Your demand zone. You look for your demand zone to trade it back up to this high. And that's what I have for EURCHF. EURGBP. Weekly was a weekly. What do I have this here? Let's go to the monthly. So higher time frame. You had a push up, a push up. The last swing was a here, pulled back to 78.88. Right. All right, all right, all right. There's an imbalance there. So price pushed up, but it also gave a internal change of character. So once that happened, this was your supply zone. Let me see if I missed something. Weekly. Let's go to the weekly. I don't see anything over here that I would have marked up. So yes, that would have been my zone, my supply zone. As you can see, once price got there, this was our swing, right? Right. Once price pulled back and broke above it, now this is my swing, right? Once price pulled back, did not close below these lows. Or let's just say it swept the lows, right? It swept the low. Oh no, it closed below. My bad. Okay, as you can see, that one candle right here closed below. So we had this close below, swept this low, so it pulled back to take out this high, and so now you have this zone here. Okay. So now that you have this close below here, what do you look for? Your supply zone. And I don't trade EURGBP, so this may be a characteristic of EURGBP, but it may not necessarily well, not saying that it's not respecting the supply or demand zone, but it looks like it takes out the wick. So like here, like once this broke, it took out this high and then started taking out this low. again, once this sold, this was our supply zone, and it came and took it out. So now I'm looking for a break below these lows. So with that being said, price gave a weekly, last week gave a weekly, week before it gave a weekly order block. Price pulled back. Did it take out the low? It did take out the low. So this is probably a characteristic. That's why I say trade one pair, get to know the pair, understand the pair, then you'll be able, like, I know GJ and US 30 like the back of my hand. So this is probably going to push up to this, because you have this internal break right here, right? Yeah, this internal break. I do not try to identify a structure when it's choppy like this. So you have this internal break that's probably going to come up here and then sell to take out these lows. Either close below or sweep it and then continue buying. But my guess is it will probably close below. Okay. Now, with that being said, there is a demand zone right here. So price is likely going to come, once it pushes up here, push back down here. And this, once this zone is broken or candle closed below, then you can look up a little high. Then this would be your swing high. This is probably your demand zone, supply zone that price will come back to. So it has to close below here first, pull back, and then continue selling. Okay. All right. That's what I have for EURGBP. GBPCAD. Look at the monthly. Let's look at structure. Right now, we have a one push, we have two push, and then we have three pushes. All right. Then we have this break here. Delete that. Then we have this break of this high here. So what do we look for? Demand zone. Demand zone. Okay. Here. All right. Price came into this demand zone. Swept. Now, hold on. Hold on. When this is the swing high, because this is not a, then this is your swing low. Price did not break that low at that moment. Swing low. Okay. So that's your swing. Once this high was taken out, this was your demand zone. Price tapped into that zone. However, if you want to consider this structure, have at it. Okay. But you had this break here. So this was definitely a supply zone until price breaks through it. And price tapped. And then we have the sweep of this low. Now we've already had our market maker cycle pushes. Okay, so, and this low has been swept. So now, and because now this is my internal swing, this is now my swing high. So I would need to see price close above here, because this was this break of structure. This is my swing high. And then this was, and I'm just gonna move this over here. This is the swing low, okay? So now that I have that, and before I do that, how many pips from here to here was like, woo, a lot. Okay, so now that this is my swing high, once price breaks above this zone, well, what do I look for? I look for some demand zone. So I'm looking for my demand zone. And of course, we're on the monthly. But once you start seeing internal breaks of structure, this would be your target. Once price got here, then you would look for market structure shift to then continue buying this up. Okay. And how far up, you say? If you just fib from the high to the low. You are going to want to target at least the 78 or the 88. All right. So once you get the first push, you get a pullback. And you get the second push, you're going to get a pullback. Then you get the third push. Once it's up here, you look for peak formation or to then sell it back down to, and maybe it won't even come back here, but once you, because it may give you another demand zone for the breakthrough of this high, right? And if it does give you a candle, a push candle, shift candle with an imbalance, say if that happened here, then you would be looking for price to pull back here. And then you'd be looking for push number 2. And then once price gave you push number 2, it's probably going to break these highs or maybe tap into this supply zone. It's going to push back to a demand zone and then give you push number 3. And that, my dear friends, is how you trade the market maker cycle. Okay, so now last but not least, what do we have? We have take a structure here. High here. Then we have this low here. Oh, once this break of structure occurred, right? You have a supply zone here. That's the only one that I can see. So now you're looking for a break of structure here. Boom. So that means everything from here all the way up here is fair game. So this is looking like the supply zone here. So now I just go down to a smaller time. Go down to close to price, because once price broke here, this pulled back. So we have a break here. And then we have a break here. All right. So, this break is probably going to take out this low. you will probably get a peak formation here, a pullback to then sell down, break, boom, back up to the zone. Okay. And then once price gets there, you will take your profits and go home. All right. So that is all that I have for this week. Wishing everyone a happy holiday and enjoy your family and be prepared to come back to the charts renewed and refreshed to kill it. All right. Happy holidays.